Hello and welcome to BQ Prime. Very good afternoon to all the viewers. Clearly, if you see in terms of markets, we are above those 18,600 levels once again. We did see a dip in intraday trade and we've regained some bit of lost momentum up to tenths of a percent. You have Bank Nifty as well, which is clearly outperforming the benchmark in the season trade. And over the last couple of trading sessions, you have good outperformance that is coming in from the broader markets vis-a-vis what the benchmarks are doing. Joining us on the show to discuss more in terms of what's in store is Mr. Vinay Rajani, CMT, Senior Technical and Derivative Analyst at HDFC Securities. Vinay, good afternoon and welcome to the show.
Yeah, good afternoon, Hiral, and thanks for having me on the show.
Always a pleasure. Vinay, my first question coming to you is clearly from the technical levels that everyone is tracking, the expectation was that we would start on a positive note. The positive momentum would continue. And if there was any correction towards 18,500, fresh longs is what was to be created. And that's the advice that analysts have been giving out. What's the sense that you pick up? Because clearly there are strong gains for the benchmark indices. Bank Nifty is also moving to crucial levels from here on.
Yeah. So yes, we are into a clear-cut uptrend. If we were to take a view on Nifty and Bank Nifty has actually registered a new all-time high. So the previous all-time high was surpassed a couple of sessions back. So it has been outperforming, and year-to-date performance is also very good as compared to the Nifty. So yes, Nifty and Bank Nifty both are in a clear-cut uptrend. And what has recently happened is like Nifty recently surpassed the crucial resistance of 18,458, which happens to be the previous swing high. So now that previous swing high, which was a resistance before, now is expected to act as a support. So it is expected to interchange its role as a support. So 18,458 is the exact level which can act as a support for the short term in Nifty. And resistance which I see for the Nifty in the current rally is around 18,900 to 19,000. So these levels are derived from the upward sloping trend line on the monthly charts. So yes, we are expecting that Nifty will hit a new all-time high soon, and 18,900 to 19,000 is a levels to look for the profit booking. So overall trend is bullish. Breadth of the market is bullish, and global market setup is also favoring the bullishness in the market. So keeping a stop loss of let's say 18,450, we are asking our clients to hold on to their long positions. And yes, stock specific movement is expected to be continue. However, we may see some consolidation, but stock specific bullishness will be continue from here.
Right. So stock specific bullishness is expected to continue. Overall, if you see in terms of Bank Nifty as well, if we are expected to see any further upside from here on, what are technical charts suggesting? Will it come in from the private banking space, or do you think will it come in from the PSUs?
So right now the weightage of the private sector bank is higher in Bank Nifty, and if you were to consider the large cap PSU bank SBI, which is having the fifth highest weightage in the Bank Nifty. So I think private bank will outperform the stocks like ICC Bank and Kotak Bank and Axis Bank. These three banks are looking extremely strong on their medium term charts, and I think they will outperform. No doubt SBI is also going strong and it can also participate. But along with the SBI, we can expect Axis Bank, ICC Bank, and Kotak Bank to do well from here. And as far as resistance for the Bank Nifty, target for the Bank Nifty in the current rally is concerned, according to the Fibonacci retracement levels that we have been tracking, according to us, 45,450 is the next level to watch out for as a resistance. And if we sustain that, Bank Nifty sustains above 45,450, then it has got potential to reach a target of 46,270. So these both levels are Fibonacci retracement levels, and as it has crossed the previous all-time high, there are good potential that the Bank Nifty will hit this target. So first resistance 45,450 followed by 46,260.
Right. So that's with regards to where Bank Nifty goes. Now let's look at individual counters which are in focus as well. Clearly, you have ITC and Titan. Both these counters have continued to witness some fresh long build-up as well over the last couple of trading sessions. What should the strategy be with both these names? Because today as well, it's the FMCG pack which is leading.
Yeah, so ITC has a significant performer in this current market rally, and FMCG index itself is hitting all-time high day by day. So the sector is performing well, and within the sector, this is the stock which is the leading one, you can say, and the stock is trading at all-time high. So better not to anticipate any target in this particular. But if you have the long position, or if you want to create any long position, I think in trading you should have a stop loss at 431 right now. Right now the stock price is 450. So previous swing high is placed around 431 odd level. So keeping that stop loss in mind, you should continue to hold on to the long positions. And if it continues to rise, then this stop loss should be kept on a trailing basis. So keep on trailing the stop loss and don't anticipate any target. It is into a momentum, you can say, and keeping a trailing stop loss would be the better idea in the stock like ITC. As far as Titan is concerned, Titan is also one of the stock which is trading around its all-time high, and technical setup is very convincing. So in that also, I see a strong support around 2,700 odd levels. So keeping that stop loss in mind, one can remain long. And I continue to believe that these kind of stocks will outperform, and the consumption theory will definitely play in the market. And Titan and ITC both are hold as of now, though they have risen. But keeping a trailing stop loss, you can definitely hold in the trading.
Right, so that's with regards to ITC as well as Titan in trade. Moving on, you have a United Spirits as well. Now, that stock has been witnessing some bit of short covering. Yesterday's session was a trend that was similar. What's the strategy that one should have for a United Spirits?
Yeah, so clear-cut rounding bottom formation is there on the weekly chart, and the stock has been rising gradually, and now it is placed above all important moving averages. And not only McDowell, but if you were to see the other stocks in the liquor segment like Global Spirit and Radico, they all have been doing well, and the sector is doing well. And this is the part of FMCG. You can say it's a part of FMCG. So yes, looking good on the charts, and there is no sign of reversal as of yet. So in this also, I would suggest that after considering the recent rise, I would suggest that you keep on trailing the stop loss. And according to me, the stop loss should be kept at around 840 odd levels. So unless we see this level getting breached on the downside, the trend would remain bullish. And I see this stock marching towards the next resistance level of 910. So it is into a clear-cut uptrend. Sector is into uptrend, and yes, we can hold it with a stop loss, and upside potential could be 910 for the next couple of sessions.
Right. Apart from that, we are seeing some bullish trends in Aurobindo Pharma as well in today's session from the Pharma Pack. Though the long-term trend has been pretty much no major moves, but YTD, the stock has been really strong and has given returns of, I think, almost 40-45%. A still good level to enter. Do you see strength further building in?
I think dip should be utilized to accumulate longs because for last 4 consecutive months this stock is going up, and it is a good thing. I think from the pharma space, this is the one stock which has outperformed the other pharma stocks significantly. Many large cap stocks have struggled a bit in last couple of months, but Aurobindo Pharma is the stock which is continuously doing good and outperforming the index as well as the Nifty. So the setup is quite good, but from the bottom and for last 4 consecutive months, this has given a significant returns to the investors. So from the level of 400, it has now reached to 650 odd level. So but no doubt it is into uptrend. But if you are looking for fresh buy, I think you should wait for some correction to come. There is a strong support around 580 odd levels. So let it correct a bit. 8 to 10% correction is required. But overall primary trend of the stock and sector is quite bullish, and we are bullish on pharma sector. So definitely on dips, you can accumulate this kind of stocks, and support for the counter is seen around 580 odd levels.
Right. Apart from that, the cement pack is also looking pretty interesting, because if you see India Cement, there are some bullish positions coming in on that name. A long build-up also seen on a JK Cement as well as a Shree Cement. What should the strategy be with this sector, and what would your preferred picks be?
Yeah, so strategy should be a buy, definitely, because we are bullish fundamental. Our team is bullish on this particular sector, and technically also we see some strength. Derivative wise also there are long buildups in the F&O cement stocks. So large cap stocks like Ultratech Cement, Ramco Cements have been performing very well, and now stocks like JK Cement and India Cement have also started performing. So yes, definitely from here, if Nifty extend its rise from here, then definitely cement sector is the one sector which can give you a momentum return in a short term. You can get a good alpha. So we are bullish from here. The stock like India Cement, which is looking very strong, which has also given a breakout from the consolidation, and Ramco Cement is obviously it is into a continuation of an uptrend. But JK Cement and India Cement, as you mentioned, we are still bullish from here. and there are still upside left, and one can remain long, and even fresh longs can also be created in the counters like this.
Right, so fresh longs that can be created here. RBL Bank, we are seeing the stock is up almost 6% in trade. Good amount of open interest addition coming in today's session. The volume also looks pretty strong. What should the strategy be with RBL Bank?
Yeah, so post this result announcement, stock has seen some good long build up, and the stock has reached about its 50 and 200 days moving average. If you were to see the setup, the price setup is like a typical textbook inverted head and shoulder pattern on the weekly chart. So it gives a good upside from here. So though it has risen more than 5% today, the next resistance which I see for the RBL Bank is around 170. So setup is good, and banking sector is banking and NBFC sector has been outperforming. I think this can support, and definitely we can see a target of 170 in the near term. Support for the stock is seen around 154.
Right, so that's 154 support level coming in with regards to where RBL Bank goes. Moving away from an RBL Bank, let's look at a couple of other counters which are seeing some bit of long positions being built up in today's session. You have PFC as well as REC. Both these counters, Vinay, are seeing a good amount of longs being added. How are you looking at them?
So entire this CPSE sector, the PSU, have been doing good. And within the PSU, if you were to consider the power finance stocks, both of these counters have been doing well. And technically, there has been a higher top, higher bottom formation, and the stocks are trading at their all-time high. So there is no doubt about that. Trend is clear cut into uptrend, and we should keep a long position over here. If from here also, if we take a fresh long position, there is a good chance that we will get some alpha in the short term. So keeping the stop loss at 135 in a stock like REC Limited from here, we can expect a 10 rupees, 8 to 10 rupees immediate upside from here. So technically very sound, and derivative wise also the day build up is going on, and the sector is also performing very well. So 8 to 10 rupees upside is still left, and keeping a 135 rupees, 5 rupees stop loss from here, you can definitely remain long in this counter.
Right, so that's a long coming in as well. Vinay, apart from these names, any other stocks that come to your radar, which one should look at?
Yeah, so mid-cap IT sector has been doing very well. So from mid-cap IT, I like a company like Mastech, which posted very good result and now started improving on the medium to long-term chart. So you can look at IT stocks like Mastech, which is trading at 2000 odd level. So we can easily expect 100 and 150 rupees upside from here. So stock could extend its rise towards 2150 odd level, and support is there in the range of let's say 1965 to 1970. So keeping this support in mind, one can remain long. The other stock which we like from the FMCG space is the Marico. So Marico is looking very convincing from here, and 5 to 10% upside can be seen positionally for in next 1 to 2 months. So these are the two stocks, Marico and Mastech, that we are recommending to our clients right now.
Right, so two recommendations coming in from Vinay as well in terms of Mastech as well as Marico. Thank you, Vinay, so much for joining us on the show and giving us those views in terms of the technical levels and strategies one should be watching out for. But a closure at around 18,642 is what we are tracking. Bank Nifty gains of around 0.4%, 150 points coming in there. We've not closed at the day's highest levels, but you have a ITC, HDFC Live, Bajaj Finserv, as well as Bajaj Finance and a Kotak Mahindra Bank, the top gainers, whereas Hindalco, Adani Enterprises, Tech Mahindra, Tata Steel, as well as Eicher Motors, these have been the top losers in trade today. So an interesting day of trade, high amount of volatility is what we've seen. Metals have been the top losers, whereas it's the FMCG pack which has been on the winning spree in today's session. And clearly, if you go to see Bank Nifty has clearly outperformed the benchmark indices. So there is some bit of sluggishness that is creeping in terms of the market, that fatigue is coming in. And Nifty is just around 1.5% away from its all-time high levels that it hit in December 2022. And in the last 3 months, we've seen a rally of around 7% already coming in there. Overall, an interesting day of trade, a lot of stock specific action, and this kind of trend is expected to continue as analysts are also indicating that the underlying tone is pretty much positive so far, and buy on dips should be the strategy that the investors should be watching out for. Thank you and have a great day.